Hello and welcome. Once upon a time, banks were all about deposits. Soon they became all about credit, and today they're all about payments, which is what we use them mostly for, or would like to use them if we can. And there are some interesting challenges there. To understand what are the challenges and the opportunities of creating a real payment economy, I'm now joined by Vivek Belgavi, leader financial services technology at consulting firm PricewaterhouseCoopers. Vivek, thank you very much for speaking with us. And Vivek is going to tell me why this is changing and how this is changing today in terms of the way people are transacting with banks and how payments have become the center stage or the centerpiece of all of this.
Sure. So there was always a need for doing cash for your transactions. So let me put it into three dimensions. So you have person, you have business, and you have government. So if you do a matrix, a lot of transactions can happen from person to person. So I can transfer to you, you can transfer back to me, or you can transfer to a third person. There is one way. I can transact to a business where I use it for in my retail or my grocery store, or I have to pay my utility bills. I also pay to the government either in terms of taxes or in some cases in terms of subsidies where the government pays me back. Now you add an element of channel to it. Now normally a lot of channels were earlier restricted to paper-based channels, which slowly moved on to some of the e-channels, like ATM was one of the first channels which got established, internet banking came into place. But the mobile banking is a big channel which is coming into place. There is micro ATMs. So across these, now channel has become the third dimension. So if you take these three dimensions and also the need of the economy, which wants to spend, which wants to transact a lot more, which wants convenience, and another key dimension has been really mobile penetration, which has increased so much. All these dimensions are making it so people were always transacting. It's not that they were not transacting, just that they are now able to transact through some of these emerging channels.
Right.
That's
so
the shift.
Payments are here. To what extent is the system, which is the banking system, responding to this demand from the customer or the customers?
Absolutely. I think the Indian banks at some level weren't burdened by legacy in a big way. So where we did very well was in last 10 years, most of the banks, including PSUs and private sector banks, they have good solid backbone in place. They have core banking systems in place. They have the back-end ERPs in place. With all these emerging channels, they have been able to establish a lot of transactional networks. Let it be switches, let it be payment gateways. That has been done. But where we are seeing and where we are envisaging a lot more innovation to come in is really on the customer experience side. The work we feel is being still done in silos. So if you see inside out view, a bank,
credit card deposits, mortgages, and so on.
So on. And within payments, for example, there will be a different channel for ATM and different technology. And there's a different channel for example, mobile payments and a different technology. Both are not same. But if you see from a business perspective, a payment is party A, party B, money sent, money received. And it doesn't really, the technology shouldn't be an inhibitor. So we are seeing, and so now you do front to back and you see a consumer, and the consumer would want to have a seamless experience and doesn't want to log on to a certain platform to do a certain kind of a payment, another platform for another kind of a payment. For example, mobile app could be a great aggregator. Why can't I use my app to do everything? I can use my app to pay to you. I can use my app to pay to my bill desk. I can use my app to pay to my grocer. So why can't that be a single point? So that is a transition that we see happening. Some of the global territories and some of the global countries, there are some leaders that we have seen who have done this pretty well, and we see some of.
One example?
For example, take Square, and they have done fantastically well. They have just simplified it. I'll take another example. There's a bank called Simple, which recently got acquired by BBVA, and you look at the interface, you can send an email and money is exchanged. There's another innovator who's brought in exchanging money on Facebook.
But this is also dependent on the regulatory environment and how liberal it is.
Absolutely. So now if you see RBI, the RBI would want ease in a big way. So if you take the recent statement by the governor, they're saying that even I can send money to someone who is unbanked using an SMS, and the person can go to an ATM, authenticate, right? So it's absolutely. So regulatory framework wants to ease it out. So regulatory and security, let me put it that way, would go hand in hand with user experience, and the technologies are available now to make that possible.
Let me ask you a more fundamental question. So if I were to go by the matrix that you've defined, right, the deposits, the three-layer matrix, deposits, credit, and then payments, are we culturally or philosophically geared for this world, wherein people are spending as opposed to maybe depositing or taking loans and so on?
So I guess the question is,
I mean, the technology will follow if we are.
I hear you. I hear you. So I guess what you would also agree is demographic is also changing. Our demographic right now is fairly different from demographic which was some years back. And generations normally have a cycle of 6 to 8 years, and so every 6 to 8 years you've got a new set of people who come in. A good example to take is, for example, mobile. Who would have thought that in India you would reach this kind of a mobile penetration within this short time span? So I would extend the same argument to payments. Who would say that right now, when we think all these payments being insecure and so on and so forth, why can't that simply leapfrog? And there are some enabling regulatory structures in place. For example, Aadhaar is a brilliant structure in place. eKYC is a great structure in place. What these will do is ensure that identification is won't be a big key. So you'll have biometric, you'll have iris, you can have voice based, and this, once you have identified, people would want ease of transactions.
Right.
And in India, my reading is, especially in last 10-15 years, anything which is conducive for business gets adopted. Because one of the reasons why mobile got adopted, other than being used on a personal level, it really enabled a lot of businesses to get connected.
So assuming that speeding up of payments is like a lubricant for the overall economy and you know, the velocity of money and all of that, what else needs to be done?
Let me put it this way. What are the different? Let me talk about what are the inhibitors, right? And then say that how can we overcome the inhibitors, right? One key inhibitor would be the network. While we still think 3G is all right, but we need to be cognizant of the fact that in India, a lot of 70% is not really in the urban centers. And the network there isn't what it needs to be to really, it's fine if you want to make a call. It may not be sufficient if you have to do a transaction, right? So for example, 4G could change the dynamics in a big way. So for example, network infrastructure, and especially the last mile, is I think one key inhibitor. Second key inhibitor, something which is linked to it, is a lot of payments in the 70% space is a lot of subsidy linked payments. And
so government to consumers.
And there's a huge bottleneck of digitization. Unless you digitize everything from RTO to land records to identification, so on and so forth, you really cannot pass benefits. So that again starts becoming an inhibitor towards this goal.
And that's particularly the state level as you start going down.
Absolutely. The third thing is these things start becoming more affordable if there's a good ecosystem around it. So we would need an ecosystem of handset makers, we need ecosystem of app providers, we need ecosystem of security organizations, we need ecosystem of people who can do authentication and verification, and all these, there's a community which needs to work together. So I personally see already a kind of a traction emerging. And if you see a lot of success that even in India, for example, in auto ancillary that we have had, or in textiles that we have had, or if like China in terms of manufacturing, is primarily because of the ecosystem. A single person can only use so much. It's kind of everyone needs to come together for the cost to be brought down, it to be more secure to get adopted. So those are the top 2-3 things which I would think would help.
Right, and the reverse being that if these were to be you know, managed and you know, sort of put together quickly, then we obviously have a far greater payments industry, so to speak. Yeah. Thank you so much for speaking with us.